I'd like to go to survey question number 3 to you all. And the survey question, I'd like to get the locals' sense of this, is what is the single largest impediment or challenge to investing in southeast Wisconsin? And I've listed up here are several: higher taxes / expected taxes. We have capital constraints, limited skilled workforce, investment exit strategy / liquidity concerns, and the last one is difficult municipal approvals / development environment. So what I'd like to do is come back around and start back here with Matt, maybe using these as an example. I know you can't easily see them. Once again, it's higher taxes, or I should say taxes, capital constraints, workforce, exit strategy, or municipal approvals. What I'd like you to ask you now is I ask you what was the positive things you saw in investing in Milwaukee. I want to flip it around. What have been the challenges? What has made it difficult or would make it difficult in the future? Start with you, Matt.
Answering just a multiple choice here, or like a...
Whatever you find. You do not have to stick with this. I want to get your experience, please.
Yeah, I mean, we haven't encountered a lot of challenges investing here. I mean, the biggest challenge that we've encountered is actually a surprising amount of competition to buy loft office buildings in the Third Ward. If I was going to be forced to pick one of those, obviously exit is potentially a little bit of a concern with mid-market assets in a secondary market, but I think it's going to be less pronounced of a concern as you see more and more competition and capital chasing deals here.
So why do you think it's so difficult to acquire something in the Third Ward? You've not been successful there.
Yeah, it's, you know, we're probably a few years too late. I mean, you know, the capital markets are back, obviously, but there's also what we see in Chicago and obviously coastal markets, San Francisco and New York. There's been a little bit of a secular shift to non-traditional office space. You know, that's a big tailwind for that type of investment. And one of the reasons we came to Milwaukee and Minneapolis is because we felt maybe that lagged Chicago a few years and we could get some assets, and we've done that in Minneapolis, and we're trying to do it here, but it's becoming a very popular asset class, and I call it an asset class. It wasn't an asset class 5 years ago. I think it's going to become almost a recognized asset class. In Canada, they call it Class I. We don't really have a name for it here domestically yet, but I think that's why it's been a challenge, is because there's a little bit of a secular shift going there, but we're going to keep trying.
Great insights. Thanks, Matt. Let's go on to Steve.
Well, we haven't had any impediments yet, but what's concerning me on the horizon near term are several things. One, I just recently heard that there are a number of industrial companies laying off workers, so that's a concern in the industrial space. I'm worried about higher taxes as it can affect our triple net leases and passing through expenses through tenants, and would push up, in many cases, their total cost of occupancy, which could then have a dampening effect on our ability to raise rents, because tenants are looking at the total cost of occupancy. And of course, in 2016, we're also going to be facing higher interest rates, which concern me. The Fed's already made that announcement, and we're into a presidential election year, which you never know what's going to happen there.
Well, for me, this is going to be the easiest question of the morning, because the greatest impediment we have to developing here is liquidity and anxiety with respect to exit. And the problem is there's just not a lot of institutional trades in the higher quality multifamily space. And that's been a big deal in the Milwaukee market for a long time. A lot of it relates to the real estate tax situation. We have a situation where you're literally encouraged to own assets long term because of the tax consequences of a sale generating a much higher assessment. And so the real estate tax picture really creates, it forces a strategy of long-term ownership. Maybe that's a good thing. But liquidity is really the big issue for us. Anecdotally, I can say, I think it was 8 or 10 years ago in Cook County in Chicago, they made an effort to adjust the tax rate for rental housing in an effort to preserve and encourage the development of rental housing, and frankly, it worked. I think the amount of housing that's being developed in urban Chicago is phenomenal. and completely reshaping that city. I think if you have a situation where your real estate taxes for a typical apartment building in Chicago are 40% less than they are in Milwaukee, that doesn't make any sense, but that's basically what's going on. So it's really something that probably needs to be addressed. And in terms of all the civic mindedness, maybe that's something to work on.
Great, thanks.
For us, it's opportunity. I think it comes from the fact that there's some strong real estate fundamentals that are working against my group. You know, given the rate of absorption that's happened in the retail space, there's just not a ton of value-add opportunities. And you couple that with the fact that I'm looking for those in deals of size, there's just not a ton of opportunities. So it's a blessing and a curse.
Great, thanks. Scott?
I think there's two factors that impact that ability to make additional investments. One, you saw earlier with the relative proportion of transactions that are being done by out-of-state firms. There is a lot more competition for each individual transaction. That affects pricing, that affects returns, and ability to obviously secure the transaction. The second thing would be, echoing something again that was said, would be concern about exit cap rates and how to underwrite those. And when you're bringing in a partner who may not have any experience in Milwaukee, the tendency is to, of course, add 100 basis points to the exit cap rate, and you quickly become non-competitive. So that's another significant concern that continues, although I think that is reducing somewhat over time as more investors from out of state invest in Milwaukee. However, it's still present.
Great, thanks. So let's see what you all had to say about this same question. What I think I heard from the panelists is that the liquidity on the backside is probably the most important, with taxes being a concern. And looks like we have a whole series of different responses, but largely really looking at the sale liquidity being the big piece. There wasn't much expressed concern around limited skilled workforce, which came in pretty high. Any thoughts about that? Are there concerns about limited skilled workforce? And I might want to go to you, Steve, on that a little bit? Or you think we're okay, obviously?
No, in our sorts of buildings, I don't think there's a lot of skilled labor. These are mostly companies that are doing distribution, little light assembly, things like that. So I'm not really concerned about that.
Okay, great. Matt?
In our opinion, I mean, 10, 15 years ago, a kid goes to a Big Ten school and maybe he wants to move to Chicago or whatever. As these cities get more and more expensive, I think you're going to see a lot of talent come back closer to home or come to cities like Milwaukee because they're just so much more livable and affordable. And I think you're going to see, different kind of skill maybe than you were talking about there, but people who know how to code and computer science type people, and hopefully you're going to start to see some organic, type of innovation with the kind of companies that are founded here.
Oh, great.
Based on livability.
Kind of going to the 18-hour city idea and kind of a more livable 24-hour city.